What's good, future millionaires? We back with another banger. I'm DecemberDeMarco, Fortune 500 marketer, here to share my insights of the market with y'all to hopefully help y'all become better informed investors. Salute to y'all for pulling up on the channel. Make sure you hit that thumbs up, like button for the YouTube algorithm, and do not forget to subscribe. So let's talk about what's playing out in the market right now. We don't only see this affecting cryptocurrency, we see it also taking, effect in the stock markets as well. So we know that the Fed is meeting tomorrow, the 20th, as well as the 21st, to discuss raising interest rates. So right here we have an article from Financial Express that I want to get into, present y'all with some facts, and also just talk about what we think is playing out. So FOMC meeting this week, jumbo rate hike of 75 to 100 basis points on cards as US Fed focus on taming red hot inflation. Markets globally will be closely keeping an eye on the U.S. Fed's next Federal Open Market Committee meeting that is scheduled for September 20th through the 21st. Markets have already priced in at least another 75 basis points increase. Why are they blocking it? However, a supersized 100 basis points or full percentage point rate hike is also not off the table. Most economists expect a jumbo rate hike as the Fed has made it clear that it is focused on taming red hot inflation in the US, even if it comes at a cost of economic growth leading to the demand of destruction. So hotter than forecast consumer inflation data recently boosted expectations for just how hawkish the Fed needs to be in order to curb price pressures. Note that the FOMC raised federal funds rate by 25 basis points in March, followed by a 50 basis points in May and a 75 basis point hike in June and July meetings each, taking the present policy rate to 2.25 to 2.5%. According to market consensus, there is nearly a 9 in 10 chance that the committee will deliver another 50 to 75% basis point this month. So this is one of the things that we see people worried about the price of borrowing money becoming more expensive. That's what's essentially happening when we see interest rates get raised. It's more expensive to take out these loans. So we essentially see the entire growth of the economy slow down because now people are only focusing on buying what they truly need. We see people cutting back in certain areas, which is, is good for the health of the economy in the sense of calming prices down. If you notice, groceries have went up about 13 to 15%, like in this last quarter. We've seen rent prices increasing in this last quarter. A lot of different prices are going up. We also are predicted to see gas prices go back up as well. So this is all due to inflation. When inflation is high, the cost of everyday items become more expensive. So in order to curb that or combat it, the Federal Reserve Chairman Jerome Powell has decided he's going to raise interest rates. And like I said, this overall creates a slowdown throughout the entire economy. So right now we're seeing most people, expecting a hawkish speech tomorrow coming from him. Basically, hawkish is bearish, basically meaning like the opposite, of basically it turning out good. Not saying it's just all going to be bad, but it just means he's not as bullish, on everything. He is basically saying like he's putting some fear into the markets. And when he does this, we see people, anticipate that, and we start to see, less buying. If they expect prices to go down, we'll start to see people sell their positions and whatnot. So that's what we see taking place right now. If you're in cryptocurrency for the long term, it's not really that big of a deal, but it's just something that you want to know of so that way you can understand what's playing out. So now let's look at the crypto markets. It is down 3.4% from yesterday. Right now, sitting at $929 billion. We got Bitcoin at $19,115. Ethereum at $13.45, down 5.3%. We got BNB at $266, down 3%. These prices won't last for long. So we also got, a few different scenarios that might be playing out here, whether the powers that be, the market makers, are trying to hold prices down, until closer towards the end of the year. But I'm expecting, us to see some wild volatility in this upcoming, next maybe month or so, because we got, especially with Shiba Inu, we got Shibarium on the loose, about to be released. We got our metaverse being built. We got shibaswap 2.0 coming with all different burn mechanisms included. We got the SHIB eternity game already available for the app version. We're waiting for it to the blockchain version to come, which will help us burn even more Shiba Inu. So, we got a few different catalysts on the horizon that I'm looking up for. So let's take a look at SHIB. SHIB is down 6% right now at that 1092 level. So I told y'all, it's never financial advice. Always do your own due diligence. Never risk more than you're willing to lose. And remember, crypto is highly volatile. You could be seeing swings in either direction of 60 to 80%. So, be careful, not to just jump in with all your money at once. The best thing to do is dollar cost average, spread out that investment over time. Keep that in mind. And it's better to buy on the red days than the green days. So you'd rather buy when the price is down because you're getting a discounted price versus chasing the candles and buying once you see all the green candles up. So SHIB right now, we already did a little TA yesterday. We seen the lower Bollinger Band was right along that where we are right now. We can see so right where we're trading right now, the price is kind of touching this lower Bollinger Band on the day chart. It's actually using it at this point as, it looks like it's trading right on it. But that could even be it being used as a resistance right now. But this is the thing though, you would always prefer to get this, to get a buy along this lower Bollinger Band versus buying it once it's at this upper Bollinger Band. Especially, of course, if we're at different price levels, that can vary. But if you're going to be buying within the same, time frame, let's say, you would rather buy closer to this lower Bollinger Band because it shows you're getting a good price for the asset versus if you're paying, while the price is up here, you're paying a more expensive price. So, don't be afraid when you see things like this. Yes, you have to understand that the price can continue to come back. Our danger level is here at this 1,000 level. You see the price wick down to it, held it exactly right there. So that's a little sketchy. It's showing that it could likely, head that way. But, if you're in it for the long term, it's just another opportunity to accumulate more for cheap. So I'm not really worried. I'm just sitting back patient. I really just wanted y'all to understand why people are panicking today or, yesterday. People are expecting, interest rates to get raised. And when that happens, we see the overall market sometimes have a sell-off. But eventually, markets pick right back up and take prices right where they were. So keep that in mind. I'm DecemberDeMarco. Appreciate y'all for pulling up, and we are out.